Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is March 20th, 2019. We're going to take a look at crude oil today just because it was up at 60 level, and that's a critical level for us right now. So I thought I would take a look at that since it's a nice round number. So here's crude, short, intermediate, and long-term trends all point to the upside. You got the technicals following suit, and we got the seasonals. So that's always a good sign when you have all of the phases that are pointing in the same directions. The trend as well as obviously the seasonals pointing in the same direction. So with that having been said, I'm going to focus a little bit on the seasonals just to give you some perspective here. Here is a 5-year chart. The blue line represents the 5-year seasonals, and the black line represents the current year. And you can see that with this little dip that was in the seasonals, that dip came a little bit early, but that's been a nice little thrust to the upside. So a little bit of a forecasting from that side. So you can see from where we stand right now that it's got a nice little surge, then there's a little bit of a sell-off, and then the secondary and the tertiary surges will be coming through here up until mid-May to late May, but certainly before June 1st. Now in the 10-year notes, or excuse me, the 10-year charts, it's not as erratic, and there's still a little bit of a sell-off that would be coming up here soon, which I'll focus on, but this still has a trend to the upside from the seasonal perspective. So there's a lot of push, a lot of wind behind us from a seasonal perspective, yet to the upside here on crude oil. Now when it comes to the seasonal projection, and I'll show how to get to this, you just simply come to charts, seasonal overview, and then projections, and then you go right to crude oil. This particular chart, what it does is it looks at the 5, the 10, the 15, and 20-year seasonal charts, and it comes up with a projection going forward as to where the market typically heads. So I'm pointing out here is that there's good moves that are due for crude. There's also sell-offs and then another big move. Now this only goes out 21 days. So when we looked at that longer term chart going into late May, we're not even looking at that portion because it's too far away. But there's definitely good tradable opportunities here, especially to the upside, and from that standpoint it bodes well for where the market is potentially headed. So if we take a look at daily bars here, kind of a big scope view here, but what I wanted to show is essentially two things. One, actually what I'll do is I'll start on the weeklies because this is part of the good news, bad news. So each of these bars are weekly bars, and you can see from this level right through here, that resistance level of 29, this resistance of 24, and I'll give you those numbers, 58.76, but below 60, that's the point. This one over here, which is almost as strong at 24, that's at 58.18. Major resistance to the market. So if you go all the way across here, we have broken above that. Call it 60 is where we are right now, and the fact that we've been able to break above that level, that's going to be key, that if the market is able to legitimately stay above that on a closing bar basis, these two levels, the closer one right here at 58.76, if we can stay above that, then it's kind of clear sailing from a weekly bar perspective as to where the market could be headed. The next target on the weeklies would be this combination of this one here and this one over here, and that's 65.85. That's pretty good move there, from a trading perspective. So having said that, that's the weekly bars. Here's the daily bars, and this will give us perhaps a better projection. Here again was some of that resistance. It was kind of weak on the daily bars, and now what we're looking at is two different levels. Got this level right through here, which is a 47 and a 37. So we'll just use the closer one, which is 63.77, and that kind of coincides with the 200-day moving average, which is what this gray line represents. And so it'll probably act as a magnet. The 200-day will probably act as a magnet, so you can watch that on your screens, or you can use one of my targets, 63.77, as the next target for the market. But I think that the 200-day might actually, because it's a little more dynamic, might actually turn out to be a little bit better. So that's where the market potentially is headed, both with the seasonal projections and the volatility associated with that, but still the upside potential and where the support and resistance levels are. As long as we stay above that 58 number that I gave to you on the weekly bars, then we should expect that it's just going to continue to trend volatile. Reversals will come out there as well, but I think that the upside would be, at least on a daily bar, the next projection would be 63.77. So where we stand right now is our systems are actually a little bit mixed. I didn't actually bring it up, but our systems are actually a little bit mixed right here, where we're actually hedged in crude. So I would suspect that if we get a little bit of retracement, kind of testing this breakout that has been underway, that the systems will have another opportunity to jump in some of our longer positions and then started getting us net long as opposed to this hedged position. So that will give you an idea as to what's taking place with crude oil. And what I'm going to end on is something new that I just added to the website. This is more of a fun project for me, where I've produced a lot of videos. They're just 30-second videos, and they all kind of look at why it is that systematic trading is beneficial to most people. And it's hard to just kind of sit and have a conversation about it, but it's really easy to just come up with a description, something that you should be aware of, some of the benefits. And so that's all that these 10 videos represent. Now I've got 50 of them that I will be posting, but for right now there's just 10. And if you're interested, you go to Resources, Systematic Advantage, and then you can just simply click on any of the different videos that we have here. I'll just click on number 9 here, and I'm not going to play it, but it's just a 35-second little thing that just will have some description. There's a wide variety of these things, but give a description as to what are the benefits to that of systematic trading, because not everyone fully appreciates it. Not everyone fully understands it, and this isn't really a course to explain it in the nth degree of detail, but it is there to at least give you some insights, and that's probably a good way to phrase it, as to little benefits here or there that why it is that people would want to follow systems as opposed to discretionary trading. And so you can see that we've got 10 that are listed, and I'll be posting the other 40, so a net of 50 here over the course of the next few weeks or so. And then that way, you don't have to watch all of them, but you can certainly just click and then go to the next and the next and next, and there might be some insights to systematic trading that maybe you didn't know about before. And that's really the upshot of what these Systematic Advantage 30-second videos are really all about. So with that, we'll end there, and we will take a look at another market here soon enough. Thanks so much. Bye-bye.